Good morning. This is Horizons Middle East and Africa. Our top stories this morning. It is day 2 of Saudi Arabia's Future Investment Initiative, where global finance CEOs are closely watching for global growth, the upcoming U.S. elections, as well as AI. We bring you an extensive lineup of speakers today. Another Magnificent Seven member dazzles investors as Alphabet beats expectations, pushing the Nasdaq to an all-time high. And Lebanon's Hezbollah appoints its new chief. The militant group says Naim Qassem will replace long-standing leader Hassan Nasrallah, who was assassinated last month. Well, good morning again, everybody. It's just gone 8 a.m. across the Emirates, 7 a.m. here in Saudi Arabia. I'm Johanna Versace, still in Riyadh for the second day of this FII conference. Let's get you up to speed on markets because we have started plowing through these earnings coming through from the U.S. Bit of a mixed bag yesterday from some of the big names. If you look at the likes of Alphabet, trading up 5% in after hours, not the case for AMD, trading down 7% as they issued sales guidance below market estimates. How that has just translated into the Nasdaq today, well, it is leaning towards the green, up about 0.1%. S&P futures also seen leaning towards the green as well. Gold in focus, just shy of $2,800 here, but this is of note. It is an all-time record high yet again, a fresh record for the safe haven here. And as we talk about the possibility of further interest rate cuts, obviously that's been boosting gold in addition to geopolitical risk getting factored in. And then we've got the U.S. 10-year yield. I do want to point out that we are trading around 4.25 today, but over the course of the last two months, we are seeing the worst trade in 2 years. So we've seen a massive backup in yields, and I thought that that was worth pointing out. In terms of our terminal chart today, we are taking a look at how the S&P index compares to the S&P equal weighted index. And what this chart is telling you is that this is going to come as no surprise to anyone, but it is tech and still tech that is leading the gains for the S&P. And once you take a look at equal weighted S&P, you'll notice that it is lagging versus the market cap S&P. So that's another point worth bearing in mind as we continue throughout this earnings week. But let's also check in on how markets in Asia are faring. Avril Hong is in our Singapore studio. Avril, just walk us through how Asian markets are reacting today. It's a bit of a mixed green.
Sure, Jumana. We are seeing that reaction to Alphabet earnings. Tech investors, I think, in a more upbeat mood, and the chip makers are helping to lift the gauges in Japan. The yen is still hovering around the 153 level. Of course, we're looking ahead to the BOJ meeting later in the week. But to your point about how it is a mixed bag, China is really lagging today. We are about halfway through reporting on the CSI 300 in terms of earnings, and so far, not looking great. Clearly, more pronounced stimulus announcements are needed to kind of lift sentiment, and this is what we're seeing today. Joanna.
Avril, thank you so much. Well, geopolitics, AI, and uncertainty over the outcome of the U.S. elections dominated day 1 of Saudi Arabia's FII summit. Tesla CEO and ex-AI founder Elon Musk made an appearance, a surprise appearance, I should say, to discuss the potential of and threats from artificial intelligence to a packed audience in Riyadh.
It's most likely going to be great, and there's some chance, which could be 10 to 20%, that it goes bad. The chance is not zero that it goes bad, but overall, at one point, one could say that the cup is 80% full. Is one positive way to look at it, maybe 90%.
Well, let's bring in Bloomberg Saudi Bureau Chief Christine Burke, who's joining me here on set at FII. Well, so much going on. The mystery guest turned out to be Elon Musk, though he did join in virtually. It was a packed room yesterday. What did we hear on the topic of AI?
Well, I think the bigger question is, what did we not hear on the topic of AI yesterday? Seriously, I sat in panels all throughout the day yesterday, and there was not one single panel that AI did not feature heavily as one of the key topics. I think some of the key themes that came through were just the amount of capital that's going to be needed to drive the AI push, and the fact that if economies are not now investing heavily in AI, they risk falling behind in this world where we're seeing more global fracturing becoming one of the key themes. There was a lot of talk as well about AI kind of helping the decarbonization push. And as you you said, we heard from Elon Musk, and we just played you that clip in which he said that there's a 10 to 20% chance AI goes bad. Some of the other things he said, he thinks that AI will be able to do everything that humans can do within 1 to 2 years. And he also thinks that there are going to be more robots than humans by 2040. He also talked a bit about how he hopes to double assets of his AI startup, AI Explain. And Jumana, it's really interesting that he was here in Saudi Arabia virtually, actually, at the FII summit, because Elon Musk has had something of a strange relationship with the Saudis over the last few years. Back in 2018, 2019, Elon Musk had said on X that he was in talks with the Sovereign Wealth Fund to take Tesla private. That ultimately did not happen. Elon Musk faced a lawsuit from shareholders saying that he artificially boosted Tesla's share price with that tweet. And there were some heated messages exchanged between Musk and the head of the PIF. So it looks like maybe that relationship
patch things up.
Yes,
yeah,
exactly.
AI brings everyone together. Though I'm not sure how I feel about robots. There being more robots than humans by 2040.
It's a bit weird to think about, right?
It is interesting, though, because Larry Fink, in one of the roundtables yesterday, David Rubenstein asked him what he thinks is the biggest macro trends. And he said the move towards the digitization and decarbonization is going to require trillions of dollars of capital. But then it was also interesting to hear all of these industry leaders talk about the state of the global economy, and the feeling that I'm getting is they're relatively upbeat about the U.S. economy, but not so much about the rest of the world.
Yeah, that's exactly right. I think that was one of the key themes that we took away, was a lot of positivity on the U.S. economy and about inflation in the United States, but not so much about the picture when it comes to Europe and China in particular. There were a lot of comments coming through about concerns for global growth in general. And look, we heard so much on stage, as you said yesterday, a couple of key topics. Of course, Fed policy was a big one. And one of the most telling moments, at least to me yesterday, was there was a panel in which we saw the bosses of Citi, Goldman Sachs, Carlyle, and the moderator asks those panelists, raise your hand if you think the Fed's going to cut rates by 2 more times this year. No one raised their hand. It was absolutely silent. And in fact, earlier in the day, Larry Fink was probably the only one that really commented heavily on rates, saying he's expecting at least 1 more 25 basis point cut this year. There were also a lot of comments on the U.S. election, but also what was interesting is the name Kamala Harris never came up on stage. The name Donald Trump did. Ken Griffin was probably the one to weigh in most heavily, saying that the expectation is that Trump will win and that no matter what happens, whether he wins or not, markets will be risk on afterward.
Yeah, well, that's one person's perspective, but I think one other takeaway is there is going to be volatility into and out of the event. Christine, thank you so much.
Thank you.
Great overview. Bloomberg Saudi Bureau Chief Christine Burke here at FII. Well, Japanese stocks are higher this morning, but most other Asian stock markets falling amid caution ahead of next week's U.S. election and Fed decision. This off the back of the rally and some of the largest U.S. tech companies. Let's bring in a friend of the program, Ayesha Tariq, MacroVisor co-founder, who's in Abu Dhabi today. Good morning, Ayesha. Maybe let's just pick up on the conversation that I was having with our Saudi Bureau Chief, Christine, over here, and the upcoming volatility around the U.S. elections. Do you think it is scaring investors away from getting involved in this market? Are investors taking chips off the table here?
Good morning, Jumana. Thank you for having me. So, yeah, well, elections are always a time to be cautious, right? I mean, this is one of the few times that people actually wait to deploy their capital. And this time, I mean, over the last 1 or 2 weeks, I think the contest has become a little narrower towards, or leaning a little bit towards Donald Trump. But prior to that, I think, you know, it was quite a heated battle. And there was some confusion as to what was going to happen. I mean, this hasn't been a very normal election cycle, right? And so I think, you know, couple that with the Fed's, you know, rate cut policy, rate cutting cycle, I think everything considered, investors have been a little confused about where to put their money, other than the Max 7, of course.
Yeah. You see in your notes that contrary to what everyone is saying and that a Trump win will be good for the USD, you have a different view. Just talk us through why you don't believe in the continuation of this bullish run for the USD.
So again, it goes back to the situation of confusion. You just spoke about, you know, people being cautious about emerging markets, people being cautious about China and everything that's happening in the world. But if we do have a Trump win, I think what happens is, of course, his policies are inflationary, but then his policies also bring in the issue of tariffs, how that will be implemented, what's going to happen next. So again, a lot of confusion, and that may sort of, keep people away from the U.S. markets. The other thing is we think that, yields may go higher because there might be more expectation of fiscal spending, which means more bond issuances, lower prices, higher yields. And if that actually happens, there's a good chance that investors stay away from U.S. assets for a while. And so therefore, there's going to be a lower demand for the dollar.
How are you feeling about China markets here? We've also got the upcoming NPC. We know that several stimulus measures were announced in the last couple of weeks. What are you expecting to hear? And is that going to give another boost to Chinese equities next week?
So I read somewhere yesterday, and I'm not sure, how much truth there is to this, but the number that's being floated around right now is about 10 trillion yuan. If that comes through, that's going to be a major benefit to the economy. That's a big number for them. The thing is, with China, there's a crisis of confidence. I think we've talked about this before as well. And they really need to step up their game here on the fiscal side. So there have been, some encouraging monetary policy actions, but on the fiscal side, I think we're still lacking. Now, it's interesting, the timing of this meeting is actually very interesting because it centers around the U.S. election. And if we do see Donald Trump come back to power, we know that's kind of not a good thing for China altogether. So I think part of the decisions that they're going to make, and this is obviously just an opinion, part of the decisions could be around who's coming back to power or who's coming to power in the U.S. So if it is Donald Trump, they may have to step up their, stimulus measures and direct it towards certain industries in particular.
Yeah, very clear. Ayesha, always great to chat to you. Thank you so much for giving us an overview on how to think about the next couple of weeks. Ayesha Tariq, MacroVisor co-founder, who is in Abu Dhabi today. Thank you very much. Well, coming up, Israel's finance minister says the war with Hezbollah should be over by the end of the year as the group appoints a new leader. An update on the Middle East conflict next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersace in Riyadh. Israel's finance minister says the war with Hezbollah should be over by the end of the year. Bezalel Smotrich was speaking at a press briefing about the 2025 budget. Meanwhile, the Lebanon-based militant group has named a new leader. Naim Qassem is set to replace Hassan Nasrallah, whom Israel assassinated just over a month ago. Let's bring in Bloomberg's executive editor for Middle East, North Africa and Russia, Stuart Livingstone-Wallace. First of all, let's just talk about the appointment of Naim Qassem. Not a surprise, really. His name was one of the names that was in the mix. But is the appointment of Qassem likely to change the course of this conflict or Hezbollah's intentions?
No, I don't think so. He's definitely in the same mold as Nasrallah. And remember, they were sort of, to some extent, running out of options about who they can make a leader because the obvious successor, which was Safiuddin, was, again, eliminated shortly after Nasrallah. And then going forward, it remains to be seen how long he will stay as leader. There was this rather ominous text from Gallant shortly after the appointment was made public saying, this is going to be a short-run thing. So at least from the Israeli point of view, they are clearly declaring that they're going to continue to go after Hezbollah's leadership.
Yeah. So let's just bring it back to the comments from the Israeli finance minister saying that he anticipates the war to be over by the end of the year. How likely is it actually that the conflict, the front that is going on in Lebanon right now will actually be over and completed from Israel's perspective by the end of the year?
I think there is a degree of optimism out there, certainly from the US side, perhaps from the Israeli side. But again, it depends about what we're talking about when we're saying the conflict will be over. What do we mean by conflict? Do we mean the ground invasion that we're seeing in southern Lebanon? Because it's absolutely clear that Israel would dearly like to get its troops out again. You know, it is problematic for them to be there in the long term, as we saw back in the 80s, into the 90s, and then into the 2000s. It is very difficult to extract yourself. If we're talking about the end of missile attacks on Israel, again, think about Hezbollah's sort of founding charter. It's raison d'etre. It is the elimination of Israel. So in order for this conflict in the round to be over, effectively what we're saying is Hezbollah has to step back from its founding principle, and it has to disarm, and it has to get out of southern Lebanon. And that would seem quite high, insurmountable barriers to surpass over the next couple of months.
And you didn't even mention that the Lebanese need to actually agree on who the president is going to be, the next Lebanese president. There hasn't been a president for the last few years as well. So still many obstacles to overcome, as you mentioned. Bloomberg's executive editor for Middle East, North Africa and Russia, Stuart Livingston-Wallace in Jerusalem. In Dubai, actually, today. Standard Chartered, the results have just come through. Let me just bring you the results that have hit. So Standard Chartered third quarter adjusted pre-tax earnings have come in at 1.81 billion versus an estimate of 1.48 billion. So that was a big beat versus expectations. Let me just give you some of the other numbers that have come through. The pre-tax profit, that's the one I just broke, came in at 1.81. The adjusted return on tangible equities coming in at 10.8%. Also talking about upgrading the 2024 income guidance. All other 2024 points of guidance do remain unchanged. However, they are saying that the operating income increases towards 10% in 2024, plan to return at least $8 billion to shareholders between the years of 2024 and 2026. So giving a little bit more color here on the distribution. So overall, what we are seeing here is a beat on the adjusted pre-tax profit, 1.81 billion versus estimates of 1.48 billion. Now, coming up, Saudi Arabia's investment minister tells us foreign investment inflows are moving in the right direction. Our conversation from the FII here in Riyadh next. And by the way, we would like to hear from all of our viewers. So we put together a short online survey. You can scan the QR code on your screen right now to tell us what you'd like to see more of on Horizons Middle East and Africa and all of Bloomberg Television, plus any other suggestions for improvement. So you can do that right now if you scan the QR code and give us any of your suggestions. Get involved. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Riyadh. The Saudi investment minister says supply chain shifts will happen, but the risk of trade wars should not be over-dramatized. Speaking on the sidelines of the Future Investment Initiative conference here in Riyadh, Khalid Al-Falih also told me about plans to quadruple foreign investment into the kingdom by 2030.
The kingdom gets $26 billion, which is the 96 billion riyals I was talking about. So ahead of target, the national investment strategy assumed that we will have a steep but manageable climb towards 2030, where the target is about $100 billion in 2030. So today we're about 4x. If you normalize for fluctuation, we're about 4x where we were before the vision started. And we need to quadruple that still to get to our target 2030. Ahead of the annual target, but not nearly where we want to be at 2030. But the reason I feel optimistic is that all the leading indicators are pointing upwards. All lights are flashing green. Investor licenses are at an all-time high. We have 10 times the international investors we had before the vision. And they are forecasting deployment of significant amount of capital. All the sectors are attracting a lot of attention. Our capital markets are growing well. We're issuing a lot of IPOs, so international investors are seeing that they have an exit, they can monetize.
I just got off a panel now talking about the state of the global economy, and one of the big themes that is coming up is this concept of geoeconomic fragmentation, further trade barriers being put up around the world, talk of further tariffs should President Trump return to the White House. How do you account for the possibility of further trade barriers being introduced in the future, and obviously the invariable impact that that's going to have on FDI flows internationally?
No, I think global trade will continue in a big way, but global supply chains and who you trade with will shift somewhat, but I wouldn't over-dramatize it because the interdependency between people on the planet, and we've just crossed 8 billion people, everybody needs to be fed. We experimented a little bit during COVID and the Russia-Ukraine war with the disruptions in global supply chain, and nobody liked it. People couldn't get their food, manufacturing in some countries stopped because parts were not coming. So I think we're coming to the reality that we need more resilience and more trade, not less. I think there is a reconfiguring of global supply chain and therefore global trade to regionalize some of it, certainly to green a lot of it and to decarbonize and to introduce technology across the board and to go to regions that are growing, where there is a population that is vibrant, well-educated, and there are companies that are invest, and the business environment is transparent, pro-private sector. All of those factors, Rumana, are right here in the kingdom.
Well, that was part of my exclusive conversation with the Saudi Investment Minister Khalid Al-Falih here at Riyadh's FII. And obviously there's been a big focus over here on what the kingdom can do to continue to attract FDI flows into the country, given it forms a core part of the Saudi 2030 vision. And there you heard from the investment minister talking up the prospects of FDI and their goals versus 2030. As we head to the break, let's take a quick look at equity markets. Futures are leaning towards the green. This as the market digests some of the earnings that came through in overnight and the after hours session yesterday. Bit of a mixed bag. Alphabet trading in the green. AMD, however, pointing towards negative. We will talk more about that on the show. But coming up, mixed bag on some of the big U.S. tech names. As I just mentioned, we're going to be talking about that in addition to some of our conversations over here at FII. Stay tuned for our conversation with Oak Hill Advisors CEO Glenn August. That is coming up in just a moment. This is Bloomberg. Welcome back. This is Horizons Middle East and Africa, our top stories this morning. Well, it is day 2 of Saudi Arabia's Future Investment Initiative, also known as FII, where global finance CEOs are closely watching for global growth, the upcoming U.S. elections, as well as AI. We bring you an extensive lineup of speakers today. Another Magnificent Seven member dazzles investors as Alphabet beats expectations, pushing the Nasdaq to an all-time high. And Nigeria's local currency falls to a record low after a steep drop in dollar liquidity in the foreign exchange market. It's just gone 8:30 a.m. across the Emirates, 7:30 a.m. here in Saudi Arabia. I'm Joanna Versace in Riyadh. A quick recap of how markets are faring. We are going to talk in a short while about the earnings that came through from Alphabet, AMD, telling very different stories. But as you can see from equity futures, S&P and Nasdaq leaning towards the green. Nasdaq at an all-time record high yet again. This market keeps going from strength to strength. But we are also seeing all-time highs for gold once more. That continues to do quite well. 2,800, just shy of that, is where the bullion is trading. So another 0.1% higher on the day today. 10-year yields also in focus, sitting around 4.25. And I noted this earlier, but this is actually the worst month for U.S. Treasury yields in the last 2 years. We've come a long way just in the last month. And actually, ever since the Fed decided to cut rates by 50 basis points, we've seen nothing but yields move higher. So put that one together. A quick look at our terminal chart today as well, and this is just drilling down into some of the equity price action. You can see from this that if you look closer at the S&P, and then you account for S&P equal weight, which means it's not giving as much weight to the market cap, i.e. basically the Magnificent Seven, is lagging versus the others. And that does tell you that so much of the performance this year has been centered around a handful of stocks, namely those Magnificent Seven stocks, as you can see from that terminal chart. All right, we are also watching the shares of AI and chip stocks this morning after AMD gave a disappointing forecast. So let's get more with the technology reporter, Newly Purnell. And Newly, a couple of results came through yesterday. Just give us the update on why AMD's shares fell so much, but then also why we saw positive price action for Alphabet in after hours.
Right. Well, for AMD, the U.S. chipmaker, really here, this is all about their revenue forecast that they missed. Analysts expected that they would say that they were expecting about $7.55 billion in revenue for the next quarter. They said it would be 7.5, so a slight miss there. The wider context, investors have been watching, can AMD make progress in increasing demand for its so-called AI accelerators? These are the most sophisticated chips that help drive AI computations. So investors want to see, are they making progress there against the likes of NVIDIA? And so this missed revenue forecast might have been a bit of a disappointment. Now, on the other hand, Google, of course, everybody knows for search, but Google Cloud is a huge business, and the number here that jumps out is 35%. That's the percentage in sales growth they said they saw for their cloud solutions year on year, and they cited AI demand, AI service demand there. Another issue investors were looking at is the regulatory scrutiny on the company. Could they deliver facing this sort of scrutiny over their operations in the U.S.? And they can. And so huge growth in the cloud business. And as well, Sundar Pichai, was asked about the regulatory scrutiny, and he said that it could have unintended consequences, he said, for U.S. leadership in tech. But again, cloud business, big numbers there, and seems to be driving interest in that stock.
Compact setup.
Newly, thank you so much. Excellent overview of both of those stocks, and obviously both of them are going to be key to watch as we try to piece together what is going to happen with the Nasdaq today. That was Newly Purnell. Now, global finance chiefs are seeing a vast field of opportunities for investment on offer from Saudi Arabia. The kingdom is one of the world's fastest growing economies and is expected to maintain this momentum amongst G20 nations in the coming years. Joining us now here at the FII Summit in Riyadh is Oak Hill Advisors CEO Glenn August. Great to have you with us.
Good to see you.
Well, let me just start off by asking you, what brings you to Riyadh?
Well, there's trillions of reasons and thousands of people. How's that as a start?
That's a good start.
So, look, this is...
But talk me through the significance of Middle East investors and what you do.
Well, look, we manage about $65 billion in the corporate credit and structured credit markets in the U.S. and Europe. We've had a very close relationship with investors in the kingdom here for a number of years. We have extraordinary relationships with a number of investors in the region. And we come here every year. We come here multiple times a year because we've built partnerships to deploy capital to generate the attractive returns that the investors in the region are looking for.
Yeah, I thought it was interesting what the governor of PIF was saying yesterday, and that they're looking to invest less internationally and more in domestic markets. How is that influencing the way you're
well, the interesting thing, His Excellency made a great point, which is the percentage allocation of capital to domestic versus international is going higher for domestic. However, because of the extraordinary growth in the PIF, the actual amount of capital and international is going up as well. And so there's an extraordinary amount of capital here looking for the best opportunities both domestically and internationally. And so we're excited about that relationship.
Let's talk about the macro. I've had several conversations here with some leading industry newsmakers from around the world, industry leaders, and I get the sense that people are feeling okay about the outlook for the U.S. economy, but a little bit more concerned about Europe. Does that tie up with your own view as well?
Look, I think that certainly the U.S. economy, I mean, you just were chatting about, everything is at record highs, right? Yeah. I mean, even equal weighted versus the S&P, I mean, they're all up substantially. The rise in rates is indicative of people's comfort in the economy. The data since the Fed cut has been positive. There's certainly concerns about potential increased inflation, concerns about the U.S. deficit. But the U.S. economy, the employment data, the inflation data, has all been quite positive, and so that's why the markets continue to do so well. Europe is a little bit more concerning just because there's not the growth that we see across in the U.S., and so you see rates coming down there, you see some concerns, and then to the extent there's changes from the election and that there might be less support in Europe because of the America First if Trump is the winner, then I think there's also issues there.
Can I just ask you, given your cautiousness about Europe, do you see a distress cycle picking up there?
Well, it's interesting you asked that question because we actually do see more, I wouldn't say distressed, I just see more special situations opportunities. We've been on the ground in London with the team since 2005. I've actually, in my firm, has been an active investor. I've been doing this now for 37 years, and we were one of the earliest distressed investors in Europe back in the early 90s. And so, yes, we see more opportunity. The banking system is different. The capital markets are different. The economy is different. The reliance on China is different. So I think there's a lot of potential opportunity in European special situations and perhaps distress.
Let's talk about private credit, which has seen a massive amount of interest just in the last couple of years or so. Let me just ask you, given, you just mentioned that you typically would look at distressed markets, obviously private credit, big theme now. Do you feel as though private credit is somewhat eating into the distressed market?
So we have to just step back for a second. So first of all, we've been in the leverage finance, high yield, liquid credit, distressed credit, private credit, structured credit, U.S., Europe for 37 years. Hundreds of billions of dollars of investments. And the markets, the private credit market is really replacing, in many respects, for new transactions, what used to go to the syndicated market. There was a great slide on Bloomberg a month or so ago that talked about, there's been so much commentary about the banks are back. And they're taking away share from the private credit market. The private credit golden era is over. But that's just not true. The banks are back as syndicators. So there's a slide on Bloomberg that $900 billion of new bank deals this year. Of that $900 billion, $600 billion was repricing, $200 billion refinancing, and only $100 billion new deals. 85% of new deals, new private equity transactions, get done in the private credit market. And so that's where the opportunity is. And in the distressed market, interestingly, the distressed market today, given the macro backdrop and given the liquidity in the markets, is relatively modest. However, because there's still a lot of debt that needs to get refinanced, we think the LME, the liability management exercise, is kind of the next leg of distress, which is really the convergence of private credit and distress.
It just, I don't know, like in some ways it feels a bit reminiscent of those days around 2005, 2006. There's a lot of hype around this. There's a lot of competition. Spreads are extremely tight. Publicly traded spreads are extremely tight. The spreads that you're getting on private credit have started to compress as well. Are you getting adequately compensated for the risk that you're underwriting?
So you are absolutely correct that in the liquid credit market, spreads are not quite at 2007 levels yet, but we're at 285 basis points for the high yield market, 175 for double B credit. However, most of your show is about the peaking equity markets and the macro backdrop. And so it's not a shocker that if there's a benign economic environment, that spreads would be narrow. Now, to your point of our private credit spreads adequate, I would put forward that 150 private credit, senior direct lending, we're getting in the neighborhood of 500 basis points of credit spread. That's 150 plus over the comparable credit risk in the syndicated markets, 150 to 200. At 500 basis points of credit spread,
you get
double-digit returns, and that's why there's so much demand for private credit, and that's why we see so many investors in the region, so many investors around the world be interested in it.
That's a great place to leave it. Fascinating talking to you. That was the CEO of Oak Hill Advisors, Glenn August, here with me at the FIA conference in Riyadh. Thank you very much again for your time. Well, coming up, more from Saudi Arabia's FIA summit here in Riyadh. We'll be speaking to Atlas Merchant CEO Bob Diamond about his view on the U.S. economy. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Riyadh today. Well, the titans of finance gathering in Riyadh this week for Saudi Arabia's annual Davos-style summit were mostly upbeat on the prospects for the U.S. economy, but are concerned about more sluggish growth in Europe. Joining us now is Bob Diamond, the CEO of Atlas Merchant Capital and co-founder of Atlas Mara. Good to have you with us.
Good to be here.
How are some of the conversations you're having in Riyadh going?
Listen, this is I think it's the 8th year that they've had this conference, and from the very beginning, it's been about the developments of the domestic economy, the GCC region, and investment abroad. And I think it continues to be that way. There's more discussion, I think, about opportunities here in the region for investors, and I think that's a little bit new in the discussion.
Yeah. What scope do you see for investments in the region? Where is there most excitement? Obviously, around here, there's been a lot of talk about AI and the push that Saudi Arabia, UAE are making in AI. I wonder if that's translating to investors as well.
For sure, and I think definitely the whole technology area is incredibly important in terms of investment here. As you know, we tend to specialize in financial services. Mm-hmm. Many of the banking institutions that are domestic or regional tend to have a very large percentage of government ownership. So for us, the opportunity to get in getting international investors to invest is it's an exciting opportunity. It's something we've been working on for a number of years.
How are you feeling about the financial services industry? I mean, in the U.S., the bank season kicked off, the earnings season kicked off. Results very, very strong, I've got to say. Do you think that momentum continues?
Well, we've always been focused on, particularly since 2008, the thesis for Atlas Merchant Capital has always been a lot of the great opportunities are going to be outside of deposit-taking institutions because of the higher capital levels and the repercussions of the 2008 financial crisis.
Yeah.
But what we see today is kind of the opposite, which is with the strength of the large four banks, and with the failure of SVB a couple of years ago, the opportunity for consolidation in regional and community banks, frankly, I think it's the #1 investment opportunity in the U.S. right now. I think that 4,500 regional and community banks, which provide a tremendous need, they solve a lot of problems for small, medium-sized businesses, for family-owned businesses, for wealthy families. But I think 4,500 is going to go through a period of restructuring and consolidation, where some of the stronger acquire some of the community banks, which in our mind are just too small to succeed, at a time when the technology investments are really quite substantive for smaller institutions, complying with the higher regulatory intrusion, really triggered by SVB and First Republic.
It's funny how you say the word intrusion, regulatory intrusion. That's kind of the wording, the feedback I've got, at least implicitly from my conversations with the bankers here from the U.S. Do you think the regulatory landscape will allow that consolidation to happen in coming years?
Yeah, I think it's one of the things when you look at this election. I think if it's a Republican candidate wins, I think the outlook for consolidation in the banking industry, for example, or consolidation in many industries, kind of a different approach or more positive approach toward regulation will come with it. Mm-hmm. On the other side, with the Democratic candidate, we probably have a little bit better outlook for international trade and for free trade.
Okay, interesting to note that. Can I just ask you about consolidation in Europe? I don't know how closely you've been looking at that market, but it's interesting to see that we're finally seeing some murmurs of cross-border with UniCredit taking a look at Commerzbank. Do you think that this is the start, perhaps, of more cross-border consolidation in European banks as well?
I do. Listen, it's been a really, really long period since 2008 where the U.S. banks have just completely outperformed the European banks. Part of that was a very different regulatory approach to helping the banks repair their balance sheets. And we've seen, banks like Citi and B of A, who at the moment in 2008 were frankly insolvent. And today they're doing really, really well, very strong operations. And I think we're just beginning to see that in Europe with banks like BNP Paribas, Santander, UBS, UniCredit, showing that kind of strength. As they get stronger, I think it augurs very, very well for cross-border consolidation. But, you know, there isn't one integrated banking union across Europe. There is one integrated currency. Yeah. And I think the progress we're seeing toward the potential UniCredit acquisition of Commerzbank, in my mind, would be very positive for banking across Europe and for future opportunities in Europe. So I do think that this is an opportunity to kickstart something that won't be an avalanche, but I think over the next decade, we'll see a stronger cross-border banking.
Certainly, it's certainly time for Europe to do that. Can I just ask where you think right now the #1 opportunity is going to be for growth markets?
So there's two things we're really focused on. I mentioned the consolidation and restructuring of the community regional banks in the U.S., and I think it's a 2, 3, 4-year process, or I should say we do, and we're very focused, working on a number of things there right now. I think the second big opportunity for us is in credit. And, you know, it's been a long time since 2008. We had a very long period of zero interest rates. I think the market has adjusted pretty well to going from 0 to 5 or 5.5%. But we're seeing more divergence in the lower levels of corporate credit, triple C's or that kind of level. Yeah. The divergence between those that are still strong operators and those that are weaker is getting greater. And we think that there's significant opportunities in the lower end of corporate credit.
Okay, that's a good place to leave it. Bob Diamond, the CEO of Atlas Merchants Capital, thank you very much. Well, coming up, Nigeria's currency hits a record low as dollar liquidity plunges over 70%. We have the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Giovanna Versace in Riyadh. Well, Nigeria's local currency has fallen to a record low after a steep drop in dollar liquidity in the foreign exchange market. Africa's largest crude producer has struggled to stabilize its currency since it was allowed to trade freely against the dollar in June last year. Let's bring in Bloomberg's Andiro Ganga, who joins us from Kigali. Andiro, what factors are impacting the currency?
Thank you, Jumana. So a couple of things to consider here. One, dollar liquidity has been up and down in the second quarter of the year. So this 72% drop doesn't come as a surprise. Investors have been sitting on the fence because the policy environment in Nigeria is very unpredictable. And we even have the IMF advising the central bank to stabilize their policy. We've seen in the recent couple of months there have been hikes and cuts in equal measure. If we also zoom in on their national currency, it's quite under some form of demand pressures because this is a currency, according to the IMF, that is the cheapest it has ever been in 20 years. It's one of the world's worst performing currencies year to date, having lost nearly 70% of its value to the dollar. And if you look at day-to-day trading, there's significant gaps there, which is further eroding confidence in this currency. And if we go back to May, when the president came into office in 2023, he introduced a raft of reforms that were to encourage foreign direct investment in the country. That has not happened. It's been very limited. Money has only come from the World Bank. There's no IMF program to guarantee investors' capital outflows. And the economy is grappling with a widening budget deficit, high borrowing, and there's no clear-cut path towards which they're going to raise revenue. So these are some of the factors that are leading to that pressure that we're seeing.
And Andira, how is the Nigerian economy reacting to the fact that the currency is falling so much?
These changes have been very hard to absorb, Jumana. If we just go back to the end of June when results of companies were released, we saw top 6 Nigerian companies recording losses of $385 million. Airtel recorded the biggest losses. Then you have Dangote Sugar saying that once they adjusted their exchange rate, they lost 68.7 billion naira. We had Cadbury increasing their prices and MTN reporting a drop in their profits. If you also look at external loans, they're reflecting limited confidence in the naira because because companies are now beginning to pay off their dollar debt. We had Nigerian breweries in September say they're going to pay off their $197 million debt. And also EcoBank Nigeria saying they're going to convert their $200 million debt into Nairas to cushion themselves against further volatility. And although the IFC will be injecting about $1 billion into the Nigerian economy to go into loans for small businesses in terms of local currency, more interventions are needed. The government will need probably to run down its reserves to buffer the currency. They could raise a Eurobond towards the end of the year, early next year, and also ramp up oil production to hit budget projections of 1.7 million barrels a day from the current 1.3.
Bloomberg's Andira Ganga, thank you so much for bringing us that overview. Okay, a quick look at equity futures before we head out for the first hour of Horizons. Things are leaning towards the green. This as the Nasdaq makes another record high, S&P very close to record highs as well. European indices not doing as well. However, we've got the stocks 50 futures looking like it's going to open up in the red, down about 0.4% as that market digests as well some of the other news hitting. But that was it for Horizons Middle East and Africa first hour. I'm Johanna Bersachi in Riyadh. Stay with us for the second hour that is coming up in just a few moments. Good morning. This is Horizons Middle East and Africa, our top stories this morning. It is day 2 of Saudi Arabia's Future Investment Initiative, where global finance CEOs are closely watching for global growth, the upcoming U.S. elections, as well as AI. We bring you an extensive lineup of speakers today. Lebanon's Hezbollah appoints its new chief. The militant group says Naim Qasim will replace long-standing leader Hassan Nasrallah, who was assassinated last month. And Kamala Harris addresses a crowd in Washington while Donald Trump is in Pennsylvania seeking an election edge a week out from the vote. Well, good morning, everybody. It's just gone 9 a.m. across the Emirates. It is 8 a.m. in Saudi Arabia. I'm Johanna Bersachi in Riyadh.
And I'm Jennifer Zavasaja in Johannesburg, where it has just gone 7 a.m. Welcome to the second hour of Horizons Middle East and Africa.
Jen, it's great to have you with me. All right, let us take a quick look at how markets are faring, building on from the discussions that we had in the first hour. And of course, a lot of earnings have been hitting this week. We have been speaking about the distinctive price action between Alphabet on one side after hours. The stock is trading up versus AMD. The stock is trading much lower, down 7% after they missed on sales guidance. So that came as a bit of a disappointment to the market. That being said, Nasdaq making all-time highs and today leaning towards the green as well, up about 0.1%. Gold at the all-time highs once more. I can't even keep track of how many record highs the gold market has made this year, but here we are sitting just shy of 2,800. 10-year yield sitting at 4.25 now. So flattish on the day, but still the worst month for U.S. yields that we've seen in the last 2 years. So notable price action and a lot of upward pressure being exerted on 10-year yields here. Switching over and just taking a look at our terminal chart today, and this just really encapsulates how much of the price action in S&P has been on the back of those stocks, those magnificent 7 stocks. They've been driving the S&P index higher. And you can see that the equal weight S&P, that is giving all of the stocks in the S&P equal weight, has been lagging. That tells you that market cap plays, i.e. the magnificent 7, which have the largest market cap, have been pushing the index higher. So just a noteworthy point as we talk about the earnings season. Let's also check in on how markets in Asia are faring. Avril Hong is in our Singapore studio standing by. Avril, just give us an overview of how some of these Asian markets are trading this morning.
Yeah, Jumana, we're seeing Japanese stocks gaining ground for a third day, helped along by the chip and bank names, helped along as well by relative yen weakness. You think about the BOJ decision, but more importantly, the guidance from Governor Ueda tomorrow. Expectations are low that we will see some clear outline or hints of whether we'll see a December or January hike, given the election uncertainty surrounding Japan, but also the US. So that is something that I think is helping some Japanese stock performance along. But take a look at what we're seeing on Chinese equities, a lot lower today. It is about stimulus disappointment, but also how earnings have come through so far, more than halfway through reporting on the CSI 300, and it hasn't looked good. This is what we're seeing in Asia. Jumana.
Excellent. Avril, thank you so much for the overview. Again, another mixed bag for Asian markets. All right, well, here in Riyadh, I've got another guest with me right now. It's Antoine Flamarion, the Tikehau Capital co-founder. Great to have you with us.
Thank you for having me.
Yeah, as I understand, and you and I were just speaking a little bit off record, not off record, I'd say, not live, but you were telling me about the substantial presence that Tikehau has over here in the region, specifically in Saudi Arabia. So tell us more about that.
Yes, correct. Thank you. And I think, for us, we embraced the Kingdom vision and the Vision 2030, and we decided to have our portfolio company be present in Riyadh. So we have various projects in Riyadh. For instance, we are very involved in the Green Riyadh, planting over 10 million trees through our portfolio company. We have a manufacturing company producing aerospace piece in Jeddah. So for us, and especially for everybody in private market, you need to be local. You need to be global, but when it comes to private market, manufacturing, production, servicing, it's local. So we decided to be local.
And you are seeing that opportunity right now in the kingdom.
Yeah, because there is a strong growth in the region. There is no doubt. The world is becoming more and more complex, bifurcated, and I think GCC and especially the kingdom will continue to grow.
Yeah. Your portfolio is, I think, 40% private credit. I was just speaking to Oak Hill, a CEO, earlier on in the show, also very positive about the outlook for private credit. Are you concerned at all that interest rates are starting to come lower, that there's a lot of competition in this space? It's going to take away at some of the opportunities there?
Three answers. First of all, the disintermediation will keep going. There is no doubt that. So that means we need more and more private credit firms to finance energy transition, cybersecurity, green agriculture. There is more and more projects that needs financing. So the future of private credit will continue to be, growing, and is super appealing. Banks have been retrenching, but they are still there. Standard Chartered published their result this morning. The Q3 is just amazing. So that tells you that banks are still there. But there is still room for private credit, but you have to be cautious because, the more private credit is increasing, the more default you will get. And you mentioned interest rate. There is no doubt that short-term interest rate will decline because central banks are more and more active. But, 10 years US, 4.25 yesterday. So that tells you that long-term interest rate will remain high. And as a consequence, companies will suffer. So that means that you'll see default in the private credit, so you have to be cautious. And that's why we decided at Tikehau to have our skin in the game. We are the largest investor in our fund. So we manage third-party money, but also our money. So private credit, no doubt, will continue to grow. But be cautious overall, and people have been overexcited and super excited with private credit.
Banks also are getting super excited and are leaning into fundraising for private credit as well. Do you see them as the disruptor or the disruptee in the private credit space?
I may say, from my point of view, and maybe it's I'm too young, but it's very surprising. What's the business of a bank? The bank is lending money, okay? And if you feed your competition, because you help them fundraising with your private bank and asset management, and or you create joint venture. We saw a lot of joint venture between alternative private credit firm and banks. So I'm a little bit surprised, but the trend keep going. Apollo just announced a big with Citibank joint venture, and it's probably good for them.
Yeah. Do you see the scope for further regulation hitting that space though? Because it is still largely unregulated. Could that be one potential headwind?
So after 2008, regulator changed the rules mainly for banks, but we see more and more rules coming from asset management as a whole. So now in the US, you have a lot of discussion about asset manager owning bank share. And you see that coming as well for private credit. For instance, for CLOs, the regulation is different. You need to have, capital invested, your capital invested. So there is no doubt that there will be more regulation for alternative asset manager and private credits more specifically.
Well, talking specifically about Tikehau, end of September, you reported that your AUM increased by 13%. I'm very curious to hear which area of the business, whether it's private debt, whether it's real assets or the private equity, which part of the business has been performing the best?
I mean, we keep raising money all around the globe. 15 billion, a third of our money is coming from private investor and wealthy investor. So that's a good trend and we'll keep going. And then when it comes to sector, we've been raising a lot of money for energy transition, private equity, direct lending, and cybersecurity as well. So we've got specific vertical like energy transition, but also private credit will continue to enjoy strong fundraising.
I'm going to ask you the same question I asked Oak Hill, which is just tying it back to the macro. I get a sense that people feel okay about the prospects for the U.S. economy, but there are some warning signs in Europe. I mean, you look at the likes of Germany, it's not really growing. The economy is growing at 0%. Real issues in the manufacturing sector, automakers coming in on a lot of pressure. What do you think that bodes for the credit distress market?
It's fairly relevant. As I said, the world is becoming more and more complex, and Europe is going to be probably more bumpy because you mentioned Germany, but not only, we've got a lot of different situations. But at the end of the day, when you invest, you need to be a little bit contrarian. And when it's become a little bit bumpy, you've got tons of opportunities. And I think we build our firm like that. And if we decide that we've got offices all around Europe, if we decide that Europe is not good, we have offices in the US, we have 4 offices in Asia, we have offices here, so we can decide to shift, the place we invest. But I think it's going to be complex, it's going to be bumpy, but that leads to tons of opportunity. That's our view to approach things.
Yes, said like a true trader. Antoine Flamarion, thank you so much. That's the Tikehau Capital co-founder. Now, switching over to geopolitical news, Hezbollah says Naim Qassem will become its new leader after long-standing chief Hassan Nasrallah was assassinated about a month ago. The Lebanon-based militant group's main decision-making body announced the move online. Qassem has been deputy leader since 1991 and wasn't seen as the obvious successor. Now, still ahead, more from Saudi Arabia's FII summit here in Riyadh. We'll be speaking to Rishi Kapoor, the vice chairman and CIO of Investcorp Holdings. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Riyadh. Well, Investcorp counts some of the Middle East's wealthiest royals and business moguls amongst its backers. Last year, an investment vehicle started by the group raised more than $450 million in an Abu Dhabi initial public offering. Joining me now is Rishi Kapoor, Vice Chairman and Chief Investment Officer of Investcorp Holdings. Good to have you with us. How are some of your conversations going here at FII?
Thus far?
Yeah.
I mean, look, we've been here for every edition. So this is our 8th edition, dating all the way back to 2017. And it's remarkable how, the event itself has evolved and come along and, taken a real firm hold on the global event calendar, particularly as it relates to a couple of facets. One is the region. I think it's one of the premier events that is focusing predominantly on investment within the region, in addition to the traditional spot that this geographical region occupies in terms of being an exporter of capital. And the second is it's very heavily focused on investment, right, and financial services. So what we've sensed this time around in particular is there is a clear acceptance of the fact that the GCC region in particular, specifically the Kingdom of Saudi Arabia and UAE, are clearly emerging as attractive markets for deployment of actual capital, not just as a source of capital, but actual investment of capital. And Investcorp having, we are born in the region, right, 40 plus years ago.
Yeah.
Having been in this place for more than 4 decades, of course, we understand the market, but more importantly, we've been investing in the market for close to 2 decades now. So it's good to see that actually that, the seeds that were planted earlier on are now bearing fruit.
In what sectors are you seeing the biggest opportunities for growth right now?
Regionally? There are a few big themes that are playing out in the region, and they all feed into the sectors that naturally therefore emerge as being relatively more attractive. One is the whole focus on diversification of the economic landscape regionally, and that in turn means that there is a big blossoming of small and medium-sized businesses, which is frankly our DNA, our sweet spot, right? We've been investing in mid-sized businesses since forever. So business services, therefore, is a very attractive space. Technology-enabled business services, but also blue-collar business services, professional services, very attractive. Healthcare, another attractive space. Technology overall, IT services, cyber services, etc., very attractive. Transportation and logistics, given the regional location, the focus particularly on transportation as well, I think is very attractive. And finally, soft services like education, etc., clearly very attractive too.
An Investcorp specific question. You announced a fund that was backed by CIC. I'm curious to hear how progress has been on that fund and whether any other new funding has come through for it as well.
So Jumana, actually that fund, the CIC backed fund, is targeting predominantly investments in the region. And that is the perfect illustration of what I was referring to earlier, right? That investor interest globally on investing in the region and reaping the rewards of the attractive economies that are developing as a consequence is very much evident, right? That fund is coming along great. We are targeting about $750 million for it.
Any deals done already?
Oh yeah, we've got 3 deals inside the fund. All of them doing particularly well, and all of them in the same space. So consumer services, healthcare, business services.
Yeah.
And all of them also focused on the Kingdom of Saudi Arabia and the UAE.
So Investcorp right now is around 50 billion AUM?
Just over 50,
yeah, just
53.
Over 50. So how are you going to get to 100 billion AUM?
Through hard work.
Yeah, of course. I wish I could get to 100 billion AUM through hard work.
No, but I think that, it's all about doubling down behind the business perimeter that we've now carefully constructed over the course of the last decade, which means that we are now in all of the relevant markets, US, Europe, Middle East, and Asia. We are in all of the relevant asset classes, private equity, credit, real assets, including real estate and infrastructure, and we have the right team going forward. And this is all about scaling up that business footprint in those markets, those asset classes, and with the investors we serve.
What do you see as the scope for potential further partnering up with some of the sovereign wealth funds of the region? I know Mubadil obviously is an investor in Investcorp, but
we've actually got a good history there, Jumana, in terms of being good value-added partners to these largest institutions globally, whether they're sovereign wealth funds or the largest pension plans, whether it's our private equity business or our credit business or our real estate business. And those are mutually rewarding partnerships, right? Because they last generations, they're not just one transaction. And so, I think going forward, we would probably see more of those rather than fewer.
Yeah. Final question for you. I've got to ask, but how do you feel sentiment has changed around the geopolitical conflict in the region?
Remarkably, the GCC region itself and its both its economic growth and its positioning as an attractive destination for investment capital has been relatively less affected, despite the overhang of geopolitical conflict and unrest in the region. Now, that is not something that you want to take for granted, because clearly, the one thing that investors hate is uncertainty, right? We are simply not good at underwriting uncertainty. We can do it to some extent, but not the bookends. So I would hope that we can find a solution, to some of this regional geopolitical conflict. But at the same time, I have to acknowledge that the GCC has been an oasis, frankly, in the middle of all this turmoil.
Kind of echoes the conversations that I've had with others in the region as well. Rishi, it was really great to chat to you.
Likewise.
Wonderful to have you here on the sidelines of FII. Rishi Kapoor, Vice Chairman and CIO of Investcorp Holdings. Well, coming up, the countdown to the U.S. elections is on as candidates from both sides of the aisle fire final shots at each other ahead of the November 5th vote. More details next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Democratic presidential candidate Kamala Harris argued a second Donald Trump presidency would be steeped in chaos and division ahead of the U.S. election on November 5th.
America, we know what Donald Trump has in mind. More chaos, more division, and policies that help those at the very top and hurt everyone else. I offer a different path, and I ask for your vote.
Trump, meanwhile, fired back at his opposition, accusing the Democratic Party of pushing the nation into decline.
The problem is, if we had more of these idiots running our country, you won't have a big and best market anymore, because we're a nation in decline. We're going to turn that around. So you're going to be so proud of this country.
All right, for more, news desk editor Jill Desis joins us now. Jill, just about 6 days away. Give us a sense of what kind of message Harris, let's start with Harris, is zeroing in on the final days of this campaign.
Sure, Jen. So what we're really seeing there out of Harris is this idea of kind of narrowing in on, this multi-pronged approach. First of all, it's painting Trump as, so she's called him in the past a fascist, dangerous for democracy, really kind of honing that message. But then she's also trying to pair that with this broader message about the economy that she's really trying to sell voters on. I mean, this is a campaign that for Harris, obviously, this incredibly condensed presidential campaign where she is trying to combine these two thoughts of trying to paint, she's saying she's good for economic policy in the country, doing that against the backdrop of high inflation, but again, at the same time, really sort of setting herself apart from Trump. I think that rally that you're seeing right there, this idea that she's hosted her big closing argument rally in the same location where, Donald Trump hosted a rally on January 6th really speaks volumes for that idea of really trying to set herself apart from her campaign opponent here.
And in terms of setting themselves apart, I mean, Trump there, we heard from him as well, trying to move past that rally that he had over the weekend at Madison Square Garden after a lot of controversy surrounding the commentary that came from a lot of those people who were involved. I mean, what's his message here? Is he focusing in then on the economy?
Yeah, I think what you're seeing out of Trump in particular is a focus on immigration and the border. That's been, typically his strongest performing issue. That's been the Republicans' strongest performing issue, is really kind of hitting out there. He also made some comments, trying to distance himself from some commentary made by a speaker at his Madison Square Garden rally, including, some very disparaging comments of Puerto Ricans. You see him trying to set himself apart from there and clarify some of that. But yeah, I think with Trump, you're really seeing him kind of double down on a lot of the things that has made him really, popular within the party. And I think really the border and immigration, he's really recognized that those are, the issues that resonate most with his supporters and something that he's continuing to put out there. So, yeah, it's kind of interesting to see how these messages are shaping up just within the final days of these campaigns. But both of these candidates really do seem to be sticking to topics that they believe have worked for them previously.
Do we expect any other surprises, Jill? I know it's hard to predict at this point.
Yeah, we'll have to see. I mean, as you said, Jen, we've still got 6 days to go before the election. You've got both candidates appearing, a variety more campaign stops across swing states, these big important states such as Wisconsin, Nevada, Arizona. So, I mean, you do have sort of an all-out push in the lead-up to next Tuesday. Of course, as we know, early voting has been going on for quite some time in the U.S. So there's actually quite a lot of Americans who have already cast their ballots, but obviously that final push is going to be really important. What that ultimately means in terms of additional surprises, like what you saw, some of that commentary blowing up around the Madison Square Garden rally, we'll have to see whether anything happens. But at this point, this really seems to be a toss-up. We'll have to see what happens here.
Down to the wire, definitely. Bloomberg news desk editor Jill Desis joining us. Jill, thanks so much for joining us. Now, coming up, we still have a lot from FII. Nigeria's currency, though, it's hit a record low as dollar liquidity plunges over 70%. We'll speak with Tony Elumelu, United Bank for Africa chairman. He's joining us @FII. By the way, we'd like to hear from all of our viewers, so we've put together a short online survey. Scan the QR code on your screen right now to tell us what you'd like to see more of on Horizons Middle East and Africa and all of Bloomberg Television, if you must, plus any other suggestions for improvement. We'd love to hear from you. All right, stick with us. This is Bloomberg. This is Horizons Middle East and Africa, our top stories this morning. It's day 2 of Saudi Arabia's Future Investment Initiative, where global finance CEOs are closely watching for global growth, the upcoming U.S. elections, as well as AI. We bring you an extensive lineup of speakers today. Another Magnificent Seven member dazzles investors as Alphabet beats expectations, pushing the Nasdaq to an all-time high. And UK Chancellor Rachel Reeves will deliver her long-awaited budget today, the first by a Labour government in 14 years, and the first in history by a female chancellor. It is a busy day, but right now it has just gone 7:30 a.m. in South Africa. I'm Jennifer Zabasaja in Johannesburg.
It's difficult to keep up with all the time zones over here. I'm actually forgetting what time it is. I'm Shimana Rasechi in Riyadh, where it's actually just gone 9:30 a.m. It's 8:30 in Dubai. It's 7:30 in Johannesburg. And this is the second hour of Horizons Middle East and Africa.
I think everyone will forgive you, Jumana, for getting mixed up in the time zones. But listen, let's just get a check at where markets are right now, potentially giving us a look at what we're expecting for the rest of the day. If we take at U.S. equity futures, continuing to tilt higher, as you can see there, slightly pointing towards the green. We mentioned that we got those earnings from Alphabet helping to push up the Nasdaq to an all-time high on Tuesday. Second straight day of gains for the Nasdaq on Tuesday. And that was before we got Alphabet and AMD to help kick off the tech earnings that we're getting this week. We're also paying close attention, of course, to the S&P futures tilting upwards. Gold as well in focus right now, hitting a record high in early Asia trading this Wednesday. Now spot gold looking at just about 2,781, up about 0.2%. And of course, as we've been paying attention over the past few days, the U.S. 10-year yield slipping ever so slightly at about 4.2462. Treasuries, though, on track for their worst month in more than 2 years amid that economic strength that we've been seeing in the U.S. economy. Helping to fuel a lot of the movements that we've been seeing in the markets. And before we move to the rest of the show, I want to give you a peek at something we're paying close attention to here in South Africa. We mentioned that budget that we're going to get in the UK. We're also going to get the first budget for this new coalition government in South Africa. We have seen a number of the reforms already help driving gains in the rand, in local currency bonds, and in the benchmark index. This chart is a Bloomberg survey that is showing the expectations that we'll actually get revised growth forecasts from the Treasury later today, potentially helping boost investor sentiment yet again. So this is just showing a look at what that could potentially be over the next few years. Now let's pivot to another Southern African country and give you a Zimbabwe news. Zimbabwe's government has passed a resolution to adopt the gold-backed ZiG currency as the country's sole legal tender. That's as the ruling party looks to end the use of U.S. dollars, but no timelines have been given for when the change will actually happen. Let's bring in Bloomberg's Ndira Oganga, who is joining us from Kigali. So, Ndira, walk us through this. What more do we know?
Jen, so what we know is that the ZANU-PF was holding its annual conference where delegates came from all parts of the country to discuss social, political and economic issues in the country. And this de-dollarization agenda was one of the resolutions. And because it's the ruling party, most of its directives anchored in form government policy. So we are likely to see it throw a little bit of weight behind the declaration by the president in 2023 to fully de-dollarize the economy, though timelines remain uncertain. How they could do this is they could gradually phase out the dollar while injecting and increasing circulation of ZiG in the market. This is to avoid economic shocks and also ensure that there isn't extreme pressure on the ZiG. Alternatively, they could introduce legislation that mandates 100% transactions of ZiG. They did this in 2019. It didn't end well because their currency ended up losing 80% of its value to the dollar, and the Zim dollar ended up being decommissioned.
What does this mean then for the economy, Ndiro? As you mentioned, I mean, the currency has really been a drag for a number of years, but are we seeing any bright shoots right now?
Jen, not likely, because the central bank was forced to devalue the Zimbabwean gold by 43% in September, and this led to inflation shooting up to 37.2% from 5.8% the previous month. To try and cushion the people, the government introduced a $40 raise to civil servants, but local labor unions say that this has not gone a long way, because if you look at the difference between the official rate and the parallel rate is at 28 in the official rate, and the parallel rate is quoting 40 to 50, hence eroding that benefit. The central bank has also hiked its rate to 35% from 20%, and this is likely to increase the cost of credit.
Bloomberg's Ndiro Ganga, thank you so much. Well, from one struggling currency to another, Nigeria's local currency felt the most in about 2 weeks, to a record low on Tuesday after a steep drop in dollar liquidity in the foreign exchange market. Joining me now is Tony Elumelu, the United Bank for Africa chairman. Wonderful to have you with us. Unfortunately, it's happening at a time where the Nigerian Naira continues to lose some ground. It remains under pressure despite some of the government's recent reforms. What do you think the government needs to do to bring back confidence in the currency here?
I think the confidence is gradually coming back. However, for currency to be strong, we need to strengthen our productive sector as a country. And I think that is where we need to focus a lot more on. I believe that currencies go up and down, but in the long run, if the right economic fundamentals are there, if the macroeconomic environment is right, ultimately the currency will find its true value. Most of us believe that the Naira value today does not represent what it should be. However, we need to strengthen our productive capacity as a country. We need to fix electricity so that we can industrialize Nigeria. To me, that is one very critical thing we need to do. And in the long run, the currency will stabilize and find its right value.
What do you think Nigeria can do to boost oil production in the medium term?
A couple of things. But first is we need to ensure that the oil theft does not even occur, so that whatever we produce, we can keep on sale.
Yeah.
And because of oil theft, for instance, our group, Ezodin's group, we produce about 50 to 60,000 barrels of oil on a daily basis. There was a time we had oil theft and we shut down. So that period we shut down, oil production for Nigeria would have gone down. So for me, first most critical thing to do is to make sure we fix security. Second is the infrastructure we have, oil and gas infrastructure we have, that is not getting very old. We need to modernize it. We need to replace it. We need to fix them. Again, for us, for instance, as energies, we produce oil, but finding its way to the export facility can be challenged. Someday you produce, next day you're turning it off because the pipeline is weak. The pipeline is run by Shell, and at times, it's not as reliable as it should be. So those 2 points are very critical. The third, I think government is doing a lot in that area by improving the operating environment for oil and gas sector. Just recently, a few divestments have been approved, and those kind of signaling encourages investors to say, okay, we can go and invest here. But oil theft and the infrastructure that we have, we need to fix those two to grow the oil production.
So you and I were on a panel together on the first day, on day zero of the summit, and the panel was about investment opportunities within Africa. And Africa's obviously a huge continent, but within Nigeria specifically, the demographics are interesting because you have a very high percentage of youth. How do you think that unlocks opportunity in the future?
The demographic is quite exciting.
Yeah.
And as an investor, I see opportunities where you see the median age of Africa is 19, whilst India is 28 and America is 35. So that is a huge opportunity. But for us to harness the opportunities, we must economically empower our young ones. We must create the enabling environment that will enable young ones to succeed. More importantly, access to capital can be challenging. Yeah. So we need to also find how to support them in terms of access to capital. And that's why my foundation, the Elumelu Foundation, is doing a lot to support young African entrepreneurs.
And final question for you, what other countries within the African continent are you seeing big opportunities for growth? Where are you looking to expand?
I see opportunity in Nigeria, I see in CDI, I see in Democratic Republic of Congo. In fact, for me, it's where do I invest in Africa? United Bank for Africa, as we have operation in 25 African countries, and the countries we invest in our country we consider very strong in terms of macroeconomic environment and also that have potential for growth.
Tony, can I leave it there? Always a pleasure to chat to you. Tony Elumelu, the United Bank for Africa Chairman, thank you very much. Well, also coming up, more from Saudi Arabia's FII summit in Riyadh, where we'll be speaking exclusively to Ron O'Hanley, that is the State Street CEO. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Riyadh. The titans of finance gathering in Riyadh this week were mostly upbeat on the prospects for the U.S. economy, but are concerned about more sluggish growth in Europe. I'm really happy to say that Ron O'Hanley, the State Street CEO, is joining me right now, and he says that the top challenge is the lack of global growth. Well, Ron is joining me now for an exclusive conversation. I guess we're putting words into your mouth before we've even started the interview. Let me just start off by asking you about how some of the conversations you've been having here are going. You were just telling me that this is probably your 5th or 6th time that you've been attending the FII.
Well, Jemana, first of all, thanks for having me. And I will say that the mood here is probably more optimistic than it's been in a while. If you think about this time last year, there was great concern about a global recession. And I think the good news is that we've avoided that. There's certainly been uneven economic performance across countries, but we've avoided that. But as you noted in the opening there, I do think the challenge now going forward is growth.
Yeah.
And will there be sustained growth across the globe? And if not, what can we do about it?
Where do you see the major headwinds coming from in the global growth context?
So I think there's a lot of headwinds to it. Firstly, we're still suffering from the residual inflation. Inflation has come down, but that's certainly getting in the way of some global growth. Secondly, there's some very important factors that will be potentially a challenge to growth. One of them is deglobalization. And if you think about it, certainly from my entire career, up until recently, I and everybody else in my industry have benefited from global integration. That has peaked, and we're now seeing a reversal to that. All for good reasons, new supply chains and things like that. But that will be an impediment to global growth.
It's really interesting you bring that up, because I had an exclusive conversation yesterday with the Minister of Investment here in Saudi, His Excellency Khalid Al-Falih, and obviously the kingdom has been very much focused on attracting FDI into the country. Yes. And the question I posed to him is whether this concept of geo-economic fragmentation, increasing trade barriers around the world, will act as an impediment for money coming into the country. And he said he thinks that some of those concerns are being overplayed, because ultimately we have no choice but to be a globalized world. Supply chains are extremely globalized, and it's going to be difficult for that to change in reality.
And I would agree with Khalid's comments. I'm not suggesting that we're going to go back to something pre-1970. But the point being is that it's not as integrated as it was, and we have to make some trade-offs.
Yeah.
Now, what's going on here in Saudi is, if you think about where Saudi has come from, it was largely an exporter of capital. What you're seeing now is there's enormously interesting investment opportunities here in Saudi and here in the region. So while the Saudis are still exporting capital, they're also importing capital because it's such an attractive FDI environment.
Yeah. Well, let me talk specifically about State Street now. Earlier this year, State Street reopened its Dubai office, and you announced plans to consolidate your asset management services, the ones that you provide in the region, in Dubai and Riyadh offices as a result. What was behind that move?
Yeah, so we have a lot of people that live in Dubai. They were working out of Abu Dhabi, and Abu Dhabi is still very important to us, and that is the regional headquarters for us in the UAE. But we took advantage of the DIFC. It's an attractive place for investment professionals, and so we've cited our investment business there in Dubai.
Yeah, and actually we spoke to SSGA president at the time of the opening, so it was really good to speak to her. You provide custody services for some of the biggest asset managers around the world. I just wonder how you're catering your offerings towards some of the Middle East clients that you have around here. Are their requirements different?
So I don't think the requirements at an aggregate level are different, but certainly there's different requirements when it comes to data, where data is, how data is being custodied. Secondly, there's an interest in being able to take a look at the data, not just in terms of how do we perform in the past, but what does it mean in terms of how we're going to invest differently in the future? And this is where some of the introduction of AI and how we think about AI in an investment process will be very interesting.
That's interesting. So you're already using AI as a tool to increase productivity and enhance the services that you offer.
I think that I would say that, like most, we're early in this because there's a lot of precautions we need to take around data privacy, data integrity.
Yeah.
But yes, AI is increasingly a tool that's augmenting what the investment professionals are doing and basically enabling them to get to a decision or a new investment idea or evaluate a new investment idea much quicker than they could before.
When you think about the business as a whole, I think in the past you've spoken about wanting to increase your lending capabilities. Could you just talk us through where you see the biggest opportunities for growth there?
So, I mean, we are largely a fee-for-service business.
Yeah.
If you think about what we do, we manage money or we service those that are in the investment business, pension funds, sovereign wealth funds. But some of those activities actually require the extension of credit. Sometimes it's for intraday or overnight liquidity. So all of our credit activities are to support our clients in the businesses that we're in.
And does that change in a region where some of these Middle East clients are actually flush with liquidity and are sitting on a lot of cash?
Yes and no, because for any given transaction, they may be flush with liquidity, but that liquidity isn't available to actually finance a particular transaction. So not really is what I would say. I think it's to be able to provide that liquidity for our clients is actually quite important.
Yeah, fair enough. Well, I've got to ask you, we've got U.S. elections coming up. I'm going to ask you for your prognosis on who you think is going to come out on top. But from a market's perspective, volatility has started to creep up, and this is expected to be a quite volatile event, irrespective of who wins. How do you position your systems for that?
So for us, we spend a lot of time answering questions of our clients or advising clients on how they position their own portfolios.
Yeah.
From a technology perspective, we certainly have focused on our systems and their ability to be stable in something like this. But I think the most important thing about this election is that there be certainty relatively quickly in terms of the outcome. What you don't want to have is an uncertain outcome for an extended period of time.
Yeah, exactly. Or a contested result, for example.
Right.
Earlier in the summer, there were a couple of sort of freak episodes in markets and markets trading. Beginning of August, beginning of September, you saw those big down days in the Nikkei that had knock-on effects on global markets. How, again, are your systems coping with these increasing VAR shock events that seem to be happening not just more often, but when they do happen with increasing amount of intensity?
Yeah, I think the most important thing from a technological perspective is being able to evaluate what is it that's happening, why it's happening, and then to very quickly be able to go to clients and say, this is what we're observing. Oftentimes it's lack of liquidity in a particular segment of the marketplace.
Yeah.
And again, it's hard to believe that when you think about how liquid some of these markets are, but when you think about some of the trading volumes that have occurred in particular instruments on days like that, in fact, you end up with a shortage of liquidity.
Yeah. And where are you seeing a pickup in trading volumes right now? Which geographic areas would you say there's been the biggest growth?
Well, right now, with the approach of the election, obviously you're seeing a lot in the U.S. and a lot of positioning around that. Some positioning around equities, some positioning around treasuries. But in terms of trading volumes overall in the aggregate, I mean, financial economies follow real economies. And as real economies grow, the financial economy tends to grow at a multiple of that. And that's what we've seen in the development of all economies over the past 30, 40 years. And so, again, you think about a region like this with very significant outsized growth relative to the rest of the world. You're seeing a growth in the financial economy and a growth in volumes right here in Saudi. When you think about the Saudi Stock Exchange and the amount of volume that's on that in a very short period of time.
I just want to bring it back to the interest rate environment. And of course, the Fed have started to ease. They cut interest rates by 50 basis points, but interest rates are still pretty high. And you've got this strange scenario where it seems as though investors are piling into stock markets. The stock markets are doing very well, but at the same time are sitting on a lot of cash too. Is that a phenomenon that you see as well? Are investors sitting on more or less cash than usual?
So investors are sitting on a lot of cash, and what they wanted to see was what was going to happen with interest rates and the intersection of interest rates in the economy. And I think that the central banks, led by the Federal Reserve, have done a really good job in terms of engineering the so-called soft landing. And so there is that cash on the sidelines. It's down a little bit, but your point's well taken that there's still a lot of cash, which we see is an opportunity for markets going forward. That market, as interest rates decline, that those volumes ought to go down as that money seeks higher returns.
Well, Ron, we're going to leave it there. It's been really fantastic talking to you. Thank you so much for taking the time to speak with us. That was Ron O'Hanley, State Street CEO, joining us here at FII. I'm going to pick up on that. We're having a bit of technical issues with Jennifer, but what she was trying to say is that UBS earnings have broken through. It's been a really busy couple of days for earnings. So let me just bring you the numbers from UBS. A massive beat on third quarter net income coming at $1.43 billion versus an estimate of 783, so almost double versus estimates. Let me just bring you some of the other headlines as well. Revenue coming in at $12.3 billion versus estimates of $11.46 billion. They will be reviewing their post-2025 capital return ambitions on Swiss rules, on track to deliver on the ambition of achieving $100 billion in NNA, that is the net assets for 2024. And then they see mid-single-digit decline in GWN net interest income in the fourth quarter. The regulatory adjustment cuts the CET1 ratio to 14.3% from 14.9%. So that is what's going on there. And just to give you some further color as well around the integration costs as we continue to piece together the UBS and Credit Suisse integration, UBS sees fourth quarter integration related expenses at around $1.2 billion. So massive beats coming through for UBS this morning. Now, moving on to another big story in the UK today, the Chancellor Rachel Reeves is expected to unveil a major package of tax hikes and extra borrowing in her first budget later today. A move which is likely to define British politics for the rest of the decade. Joining us now is our UK correspondent, Lizzie Burden. What a huge event coming up, Lizzie. I feel like we've been talking about October 30 for weeks now. What is at stake with this budget?
You're absolutely right, Jemana. In fact, Rachel Reeves has waited longer than any of her predecessors in more than half a century to deliver this first budget. 117 days she's kept everybody waiting, and that has allowed time for fear to fester and for consumers and businesses to be spooked by this economic narrative of doom and gloom. So it's hugely significant. It's the first Labour budget in 14 years, the first time ever that a woman will be
carrying that red box as Chancellor. And Reeves herself has compared it to the historic Labour budgets of 1945, 1964, 1997. So setting real expectations here, because you say this is going to define British politics for the rest of the decade, but it could also be consequential, Jemana, for markets as well. We're still recovering, mentally at least, from that mini-budget, which was only 2 years ago from Liz Truss. The question is, in those past 117 days, has Rachel Reeves done enough to roll the pitch, to prepare the markets for the change to the fiscal rules that she's going to make, and in order to borrow one of the most amounts in the UK's history?
Yep, that's certainly a lot on the table and a lot of pressure on the Chancellor to deliver. So let's see whether it actually translates to growth for the UK economy. That was Lizzie Burden. Well, thank you for joining us on this journey in FII the last couple of days. Right now, that is it for our show, but we're going to hand you over to Daybreak Europe. We will have more interviews throughout the rest of the day.